What's going on, you guys? It's Royce Jacob. Welcome back to the channel, and in this video I want to talk to you guys about why I think Robinhood investors and retail traders as a whole currently run the stock market. I know I also mentioned in the title that you have to know who you're playing against, and that's because that's the underlying message that I want to convey with this video. It's not only important to understand the game you're playing, and the stock market to an extent is a game. You have to understand your opponent, all right? You have to understand who you're playing against, because if you do, it gives you that little edge and that little extra potential to outperform them. All right, so over the course of this video, we're going to look at a few solid articles that cover the retail investor topic. But first, I actually want to go over with you guys a few highlights that I wrote up, all right? So again, these are a few key points that sum up my thoughts on the subject. I feel like that's just a good place to base this conversation. So we'll start with this. But first, I have to ask you guys that if you do go on to gain value from this video, that you please give it a like and subscribe if you're not already and want to catch more content like this. You can also check out the newsletter and portfolio down below. First link down there. I did actually send this out to them this morning before I even recorded this video. So check that out if you're interested. If not, no worries. But let's get straight into this, okay? So I titled this Issues to Consider in a Retail-Driven Market. 1. With less experienced traders comes less of an ability to stomach loss, especially when they've only experienced green days. Those who can't stomach loss have weak hands, and those who have weak hands sell. 2. A playing field with novice players in the game can result in more foul play. The foul play in this circumstance is volatility. The game becomes much more erratic and much harder to predict. 3. As retail traders begin to go red and get margin called out of their positions on the bad days, they will lose faith in their ability to perform and quit. As they exit the game, market makers like hedge funds, who are much more experienced and have far more resources and access to information, will be able to dictate the pace of the market once again. All right, so this is a little analogy. I know I'm definitely on this game, the players in the game kind of wave right now, but this is an analogy I wrote up for you guys, all right? I'm pretty proud of it. Imagine you're playing a soccer game. On one side, you have a pro team, who are the hedge funds. And on the other side, you have a bunch of rookie players who think they're hot shit, who are Robinhood day traders. This isn't a traditional game, though. The pro team has 11 players on the field, but the rookie team is allowed 22 players, twice that of the pro team. For a while, the rookie team will be able to dictate the pace of the game, but as the pros start to warm up to their strategy and begin to outplay them, they'll lose their confidence and throw in the towel. As they leave the game one by one, the pro team gains more and more of an edge to smoke them that much harder. All right, so I do want to say that this might come off harsh to Robinhood traders. I'm talking about retail investors as a whole. Robinhood traders are just kind of the epitome in the news and everything in regard to dictating the market. I myself am a Robinhood trader. I love Robinhood. I think it's awesome that there's so many people out there, so many new investors being introduced through Robinhood to investing and through all these like E-Trade, Webull, whatever platform you're using. I think it's awesome. But I just want to talk about the reality of what that has to say about what it'll do to the stock market and the price action within the stock market. Okay, so these are my key points. Again, it's a pretty dangerous place to be. This much retail investors and this many experienced hands and just weak hands in the market. And it's okay if you're a newer investor, if you're new to the game, that's fine. But again, the newer traders are just going to have weaker stomachs. They haven't experienced, especially if you just got in within these last few months. Again, it's awesome that you're educating yourself, but I remember when I was just starting out, it's so hard. Even if you educate yourself, if you spend so much time educating yourself and think you spent a lot of time, when you see a significant red day and you see significant volatility, it does take a strong stomach that only years in the game and just being through it before will provide you. Okay, so it does worry me. It will bring a lot of volatility. Let's get on to this first article. So this is a CCN article titled, "This Stock Market Chart Exposes the Insane Level of Retail Investor FOMO." All right, this is a great article. I read this multiple times and I thought it was really solid, so I want to go over it with you guys. All right, retail investors historically underperform the market. Lately, they're bucking that trend and beating the pants off smart money. Okay, so smart money in this case, hedge funds, large players, the whales, the market makers. It's not a good sign when retail investor optimism heats up to sweltering temperatures like we're seeing now. Retail investors have outperformed the so-called pros in the stock market over the past few months. There are two reasons why. First, professional money managers are cautious. They're evaluating economic signals, in many respects, conjure terrifying parallels to the Great Depression. Second, retail investors are throwing caution to the wind. They've observed a big market pullback and they're buying the dip with reckless abandon. And for now, it's paying off as speculative stocks surge into inexplicable levels. All right, so again, a lot of the funds, again, Warren Buffett is kind of the perfect example of this. A lot of people heard a few months ago, Warren Buffett pulled his entire stake in airlines. And Warren Buffett, is a lot of people are kind of roasting him because, oh, we sold before they all popped up. No, it's because Warren Buffett is smart money, and he doesn't seem smart now, but Warren Buffett actually understands the economic reality of the situation, not like a lot of these the little moon boys, the little travel stock moon boys who are buying up these travel stocks that suck. Their financials suck, their fundamentals are terrible, which Warren Buffett understands. But again, a lot of these people see low buying opportunities. I can't tell you how many friends who don't trade, and I do love them. I love my friends, but they're hitting me up saying these look like great buys. They're so low. The reason they're low is because their fundamentals suck and the industry's changed for forever. Okay, so it does worry me. It's just little signs like that. And you guys should always keep an eye out for those signs when friends who you love but realistically have no idea what they're talking about approach you and talk to you about things like that. All right, that's good on the groundwork, and that's a big thing, especially in this retail driven market. You have to do that groundwork. You have to keep your ear to the streets. All right, so retail favorites index shows investor FOMO is getting out of hand. All right, and that's this chart right here. Okay, so this to sum it up, that's evidenced by the retail favorites index, which shows that popular retail names have performed better than stocks widely held by hedge funds. A declining retail investor index shows that the amateurs are outperforming the pros. This typically happens in heady markets. Okay, so in volatile markets. All right, and you can see that up until the end of 2019, the beginning of 2020, that this index started to fall off an absolute cliff. Okay, so now retail investors are far outperforming hedge funds. Again, a lot of the bigger funds, a lot of the smart money understands the economic impact that this pandemic, that this virus, that this lockdown is going to cause on the entire world, and they're pulling out. Okay, but again, for right now, this relief rally that we've seen is caused by a lot of retail traders and a lot of new traders, which again is great that people are educating themselves, but that's the reality. Is a lot of inexperienced, uneducated people are getting into the market and shooting up these stocks that objectively suck financially. Okay, so that's that one. Wait, did I want to read you guys? Okay, so right here, this is another segment I wanted to really read with you guys. Value investing is dead, and the retail day trader killed it. In an odd scenario when Warren Buffett is on the opposite side of a retail investor trade and losing. But today's retail investors don't worry too much about things like valuation. Much like the high-flying day traders of 1999, there's no real concern over things like revenue and profitability. And when cautious investors like Warren Buffett, the famed billionaire, is dismissed as yesterday's news, he's been attacked for his age. All right, so people are calling him a boomer. This dude's old. He doesn't understand the game. Let these new dogs step up to the plate. Not only that, but the retail traders who have made out like bandits buying up airline stocks have since surged higher while Warren dumped those names at a loss. Sure, maybe down the line, airline industry's hefty drop in revenue may create some trouble, but retail investors are confident they can buy them out, or be out by then. Clearly, we're in a new era. Through all those studies about individual investors underperforming the stock market. Who needs sports betting when the stock market works far better and has way better ways to leverage a trade? Who needs to invest in established companies when any story stock will do? And again, I did cover this in a video, and I've been covering this a lot lately, just about how the market sentiment has changed. Again, you have to adapt. That's the reality of the markets, but it has shifted from a market based on fundamentals and the reality of a company's financials and well-being to, hey, I think in 50 years or maybe never, this stock is cool. The stock has a cool mission. Nikola's the perfect example of that. The Tesla competitor, not a competitor. They have 0 cars on the road. Nikola stock absolutely exploded, bubbled up to crazy heights, $30 billion valuation, same valuation as Ford in the span of just a few days, because people are just betting on the fact. People realistically hear, oh, Tesla competitor, these guys might be a Tesla competitor, which they're actually not, because again, they have no actual product on the road. They just have concept cars. But people are betting on the fact that it might compete with Tesla, so I should probably get in on that. It's crazy. The market's in a crazy place right now. I get it. I understand why it's this way. I don't think it's for sure not healthy. It's objectively not a healthy place for the market to be. So again, I do think that this will definitely affect the market in a negative way in the long term. The short term is a toss-up. Everything's crazy right now. But over the long run, I do think this will affect the market negatively, almost undoubtedly, in my mind at least. All right, so this is a chart that shows Robinhood data show a leap in retail investor equity trading activity. Okay, so this dark blue line is the S&P 500 index, the SPY, and this blue line is the number of Robinhood users positioned in the S&P 500 stocks. All right, so you can see, again, this is the same back in this chart I'm not going to go down to it, but back in this chart, again, end of 2019, early 2020, when retail started to outperform hedge funds, is really when all these Robinhood investors, and I imagine this, again, Webull, E-Trade, whatever brokerage account you use, this line will look very similar on all of them, again, because there's just more people being introduced. They know they're getting into the market. The market, like literally inversely correlated. So it's exactly the opposite is when the market crashed. Robinhood investors, so retail Joes and all your day traders, started picking up all the undervalued stocks that they thought were good buys just because they're low while the financials still suck. Okay, so that's a very good sign, just showing, just to, not good sign, but it backs the point that I'm trying to make, that retail investors just control this market. All right, so this is actually a really cool article by Medium, like very, very interactive. Like I love just the style of this article, like very well-made article. I respect this guy. Rob Walker is the author. It's how Robinhood convinced millennials to trade their way through a pandemic. It is a Medium article. You guys can check it out if you want. I highly recommend it. I'm only going to read through. This is a very long story, but I only want to read a few of the key points over here, okay? And then just kind of harp on it myself. Free apps in this bull market are bringing the ability to make foolish decisions to an even broader swath of people. Okay, so that's the beauty of what Robinhood specifically as an app did. It was the first app to offer commission-free trading. Before that, we all had to pay like $6 a trade. So that sucked. $6, 5, 10%, whatever. But yeah, Robinhood was the first app to do it like this. And I love, again, Robinhood is personally my favorite app. I use it every day. I love the platform. Great company. If I could invest in Robinhood, I would. I might try to somehow. But again, Robinhood really pioneers in this space, offering commission-free trading. And that's, again, it's so great that so many new investors and so many people who want to change their financial well-being and financially educate themselves and get their money invested, put their money to work, have their money make them money. That's amazing. And Robinhood brought that to a lot of people. But now in a time when the economy is really, really bad, it has evidently, as we can see in the current market, caused for a very sketchy stock market, okay? And then, little voice crack, sorry about that, embarrassing. All right, so among people earning $35,000 a year or more who received a government stimulus check, many used at least some of that money to buy stock. And again, that is a beautiful trend. That's an amazing trend that's developing. People are having their money make them money, all right? They want to have their money make them money. That's financial literacy. That's financial savviness. That's fantastic. All right, but $35,000 a year is on kind of the lower end. So you're gonna have to assume these are younger individuals, newer investors, newer traders, less experienced people that are getting into this market. All right, we scroll down. Like this is go check out this article, guys. This is a great article. These little graphics are awesome. Scroll down. It's about giving more people a feeling of access. That means that might someday rocket them into the top 1% too. All right, and again, that's the beauty of Robinhood and all these commission, and now all these other, even like E-Trade, a big app, has followed suit in commission-free tradings. It's giving the people who literally couldn't afford it, like $6 a trade, a lot of times adds up a lot, and it does make it intimidating. And Robinhood gave people access. People who weren't familiar, they made a super sick app. They made a user-friendly app. I'm pushing Robinhood right now. App link down below. Use my link. I get like a free stock out of it, and you do too. If you do, great. If not, whatever. I'm just made a joke out of that. But again, it's so awesome that Robinhood was able to provide this to a lot of people. That's the reality. That's what they did. They created a sick app, super user-friendly app that was easy to use for new people and free to use. All right, so that's awesome. And again, it's so like I will end this on a high note, although I already did express the dangers and why I feel it's dangerous that there's so many inexperienced traders in the market that are actually dictating this market. They are controlling this market as of right now more than hedge funds. So that is dangerous. That is objectively dangerous. But it's awesome that people are learning, people are educating themselves, And this is a skill that lasts with you for your life. All right, you outgrow the ability to do physical things. All right, like soccer, like the soccer analogy I used before. Love soccer, played soccer my whole life, but there will come a day later in my life when I can't play soccer anymore. But you know what? I can trade forever. I can research and learn and educate myself on the financial markets forever, and that's a beautiful thing. You just keep getting better at it, literally until you die or your brain goes to goo. All right. So that's amazing, and I think that's a pretty good place to call it there, you guys. I do want to wrap it up by saying, just keep an eye out for volatility. All right, that's the main thing, along with know your opponents. Understand that this is so sick. I love this, but understand who you're playing against. Understand your opponents. Understand who else is playing this game and who is dictating this market. All right, a lot of times it's the hedge funds, and I do think that at the end of this, the hedge funds are going to come out on top. When that will be, I don't know. But I do think that if the market does continue to fall, if the economy does catch up with the markets, it will, unfortunately, it will teach, but it will both teach and scare out a lot of that new money, a lot of those weak hands that got involved with the market and have only seen green for the past couple of months. Okay, so and when that happens, that kind of just opens the floodgates, that topples the whole house of cards. Okay, so just be careful, you guys. Be careful investing right now. Be careful in these markets. Keep educating yourself. All that good stuff. But I love you guys. I truly appreciate you guys watching this. If you have watched this far, I really do appreciate you. It means a lot. This is a super fun video to make. I really looked forward all today and yesterday to make this video. So I hope you guys enjoyed it. Again, give it a like if you gain any value from it. Subscribe if you're not already. Again, check out the complete portfolio and newsletter. It's exactly as it states. It's a complete breakdown of every position I have in my portfolio. Call options, put options, stocks, cryptocurrencies even. And every trading day I update that bad boy, and after I update it with my current positions and any new positions, any positions I closed, I will send out an email newsletter to all of you guys who are part of it, talking about why I made the decisions I did and just kind of what I'm thinking about the markets. It's just more real-time updates from my perspective. So check that out if you're interested at all. If not, no worries, but I appreciate you watching. Always remember, you guys, take action, make waves. Peace. Till next time.